You know those wacky life insurance commercials that have crazy scenarios talking about how their life insurance is so good? I remember watching an episode of SNL where there was a life insurance company that covered people in case of robot attacks. It was crazy. Well, whether you're getting attacked by robots or not, I have one question for you. Are you insured? Hi, I'm with Money All Stars, and in times of uncertainty, exploring different types of life insurance probably isn't your biggest priority. But it's crucial not only to understand the choices you have when deciding on life insurance, but also which one fits best for you. Well, there are five main types of life insurance: term, whole, universal, variable, and final expense. But we can break those up into permanent and temporary life insurance. The only type of temporary life insurance is term. It covers people for a certain amount of time, like 10, 20, or 30 years, and has a death benefit if you die within the period it is active. It's the most affordable option, but it is only available for a limited period of time. Permanent life insurance, on the other hand, is exactly how it sounds: permanent. We'll start with whole life insurance. It covers you for your entire life and builds cash value, which term coverage does not. It too has a death benefit, but whole life insurance costs more than term. Another popular type of permanent coverage is universal life insurance. Universal coverage also builds cash value and has a death benefit, but it differs from whole life insurance because universal coverage is more flexible. For example, with whole, premiums do not increase. For universal coverage, if your income changes, you can increase or decrease your premiums, which tend to be lower than other types of coverage. But there is a chance that your cash value and death benefit will not grow as fast. Think about it like this. Universal coverage is more flexible but riskier, while whole coverage is stiff but steady. The next two types of permanent coverage are variable and final expense. Variable coverage is the same as whole and universal, but it allows you to invest in stocks, bonds, and mutual funds, which can be a risk in itself. Also, with variable insurance, there are fixed premiums just like whole. Finally, final expense life insurance is typically better for older people, and the death benefit amount is usually between $2,500 and $40,000. This type of coverage helps with funeral arrangements and any lasting legal expenses. These policies tend to have lower premiums with some flexibility and increased cash value over time. All things considered, life insurance is crucial to have because you never know what may happen to you or your loved ones. Now you may be wondering, what policy do I go with? And that's a little more complicated. It all depends on what you're looking for. If you want lasting coverage with flexibility, you may want to consider universal or variable. If you can only afford a small amount, perhaps you should go with term. To help you make a decision, I've linked some resources for you down below. If you want more videos on life insurance, let me know in the comments. We'll catch you later.